Oh, shit. Is it is it working any better now? I I really can't tell. Sorry guys. I thought I had it figured out, but oh, it looks like it may be working now. Okay, cool. Yeah, I just turned the resolution down so that, it wouldn't have all these issues. No, I'm not gonna make an O face. All right, let me do one thing real quick. All right, cool. I think it's all good now. So I try and plan for all scenarios. If there is a major crash, I guess the DCA index will go negative. If so, what's the plan? Hold right through. So I kind of talked about this the other day, but when I made the model, it was well before I had started YouTube. So I wasn't, it wasn't made in a way such that, it was for public consumption. So I had to, when I decided to start giving it out, I had to sort of normalize it because as it works, as far as I see it, it's just two numbers and those numbers aren't 100 and zero. They're like, thousands and negative thousands. So I had to make it so that it's, at max hits 100 and at minimum hits a zero based on everything that we've seen in the past. But still, theoretically, it can go below that, or it can go above 100 or below zero. And that would just, I don't suspect it's ever going to go significantly below those levels. But if it did, that would be just like, a continuation of exactly whatever's happened in the past. So, if it was -5, for instance, I would just treat that just like, one of these situations, one of these bottom type situations. So I could actually pull it up here. So, like if things got really bad, it could technically, it could go below zero here. But, even if it did, I would just be treating it like, like this situation or, other times where we've been close, like down here. I don't know why it's not. Normally it just goes straight to log for me, but so like January 2015 or like we saw here in December 2018, you know. I'm actually doing a video on Link today. So if you are into Chainlink, you might be interested in it. I just kind of talk about, in my opinion, why Link is still fairly, why it's still fairly bullish based on, um, well, I'm not going to give the point of the video away, but if you're interested, you can check it out later. I'm not a very good so the question is when did I learn to code? And I'm not a very good coder. So I wouldn't say that, you know, that's one of my big talents. So, okay, the question is why has the volume been lower? And this is something. that, I think um, just gets kind of ignored. So when we take a look at volume, you can see the volume has been trailing off, right? It's been trailing off in these last weeks. And I think what you run into a lot of people is discussing something like, um, you know, oh, well, why is the volume so much lower than it was here or here? Well, the price is much higher than it was in those locations. So, it's easier to trade a $1 asset than it is a $100 asset, for instance. So you're naturally going to have some, um, volume degradation with respect to that. So I think a better way to look at it, if you want to think about it in terms of how many dollars are being traded, this is, sorry. This is kind of how I think the better way to look at it is it's the, a metric of the price times the volume. So, this is basically asking how many dollars are being traded on the asset today. And if you look right now, assuming it's working, so, the price volume shows you how many dollars are being traded on the asset. And you can see that we're fairly close to, where we were back here in 2017, right at the peak. And we're well ahead of where we were all through 2020. We're back at these January 2021 levels. And those are, that's during the, the biggest stages of the bull market. You have to remember most of the gains Bitcoin made happened by January. So there has been, an increase. The volume had been trailing off ever since December, but we've seen some of the volume come back. Although, mind you, at least some of that was um, sell volume in the capitulation because you always see, the volume go up significantly more during the sell side. But notice that right when we hit this level down here, once we got down to 32,000, we started, seeing this buy side volume coming in. And that's because you have, like I talked about in yesterday's video, I think you have fair support sort of in this level right here. You have, this is the level where, if you're an institution, you know, you may want to start acquiring Bitcoin because you definitely don't want to buy it at 60,000. You don't want to buy it at 50,000. You probably don't even want to get in at 40,000, especially when you know that you can likely get it in the low 30s. And so those guys aren't going to be, they're not FOMOing into the market. FOMOing is for retail investors only. Damn, we're just having all sorts of technical issues today, it looks like. Maybe it wasn't meant to be. Yeah, I'm not even seeing the chat anymore, so I don't know, man. I might not do this much longer because it doesn't look like it's I don't think it's supposed to happen today. No, so the question is the volume bars are based on the price of the asset. Well, let me ask you this. If I spend $100 or if I, if we have a, let's take, I don't know, Cardano, it costs $1 right now. If I spend $100 to buy Cardano, then I bought, 100 Cardano. But if I buy, what Solana, which costs $100, and I spend $100, I bought one Solana. So the volume for Cardano is 100, whereas the volume for Solana was one, even though the same number of dollars were traded on both of those assets. So comparing volumes across different prices is sort of misleading because, yeah, sure. I mean, let's come look at our volume back here when Bitcoin was $200. This, if you only looked at that, that would lead you to believe that, Bitcoin was way more popular at $200, but it wasn't. It was just cheaper, so you could trade more shares with less money. What's my relationship with Ben Cohen? Are there any bad feelings because you made your. I mean, I don't have a relationship with him. He's just a guy. He's just a guy on YouTube with a model that's, you know, he has a model that's about $1,000 a month or $1,000 a year more than mine is. So other than that, there is no relationship. He also has a newsletter though that, has half of an article and then 3 pages about the risk model that again is $1,000 more expensive. I'm kidding. No, but seriously, it is. No, I'll tell you, I'll keep it real. I'm not scared of, of someone or hurting anyone's feelings. It's not like we're going to be buddies out here, you know. What would I? Okay, so this I love this. Do I have legal insurance ready for what? Let's. I mean, if I'm selling a car that's $1,000 and my competitor is selling it for $10,000, and I'm like, well, hey, your car is $10,000. I'm not slandering the model. It's a great model. It's not even politics. It's just the truth. That's it. Yeah, that's our relationship that people don't know about. So someone said that they discovered me through, he accidentally live streamed my channel for a short amount of time because I don't know, right when I first released my model. So that's how some people found me. No, I mean at the end of the day, you know, his channel, you know, it's as far as the crypto YouTube space goes, he's a pioneer of sort of the, more data-driven approach to the market. I mean, he's the one who discovered that people would be interested in stuff like that. So, I mean, you know, I don't mind, teasing him slightly, but it's at the end of the day, I have nothing but respect for him. Plus, he's turned it into an amazing business. So, you know, crypto could go to zero and he'd be fine. So you have to respect him in that regard. I mean, in every regard, really. I mean, it's not like he's a jerk or something like that. He's, you know, I'm not saying he's not a good guy. I watched his channel for a long time, notwithstanding, various opinions that I have about whatever it is now. But I mean, I think his channel, he's the one who, in a sense, made a lot of what some people do now possible by, sort of discovering for everyone that there would be an interest in this type of thing. Well, thanks. I'm glad you found me too. No, I'm serious. Everyone's like, sure, Jay. No, I'm serious. You know, I don't know. I guess you have to know who I am, but I'm not scared to, pull punches. So, when I tease about or, when I make lighthearted jokes, you know, it's just that like because I really do have respect for him. I think he, things like a lot of the original work that he was doing was really, really quality stuff. I mean, if you go back and look at things like his Monte Carlo simulation, just and truth be told, a lot of it's not like he was the first one doing this stuff, but he's the first one to bring it onto YouTube. You can find Medium articles dating back prior to, his channel talking about a lot of the same things, but he put it in a way that was, palatable for the average consumer. And, it shows, in the fact that he's, gained so many followers over the years because, um, he's well spoken. He does it in a way such that your average person can understand. He he doesn't do a lot of he doesn't do a lot of he does do some hopium, and I would suggest that perhaps a bit more lately, but overall he takes a more realistic perspective, and I think it's a healthier perspective. He's bullish, but he's, taking a somewhat healthy, or in my opinion, a healthy approach to the market. And in all of those regards, let's put it this way. Let's put it this way. Of all the channels on YouTube, of all the channels, and you can find critiques in every one of them, and his is absolutely, without a doubt, in spite of whatever flaws you may be able to come up with, myself included. Like I said, I tease about his channel or make small jokes about his channel. Of all the channels, Ben Cohen's is not a problem in the space. It is it's one of the more shining lights in the space. Okay, so that would be sort of my stance on the issue. I don't know who Chico Crypto is. I don't watch crypto YouTube. I watched Ben Cohen and I watched some Coin Bureau, and that's about it. I That's why you see me being literally one of the biggest social media noobs you've ever seen before, because I don't use Facebook. I never use Twitter. I never use Reddit. YouTube, I would watch some like History Channel shows and stuff like that. And other than that, I didn't really have any experience with any of this stuff. So this is all uncharted territory for me. What will happen if they decide to raise rates in March? I mean, I don't know. It's tough to say because um, if we go back and look historically, you know, the market was already crashing back in 2000 when the Fed came out and said that, or when they started raising rates. But I think overall, what you're going to see is there has to be a pullback if they start raising rates and doing it aggressively. It will just come down to um, it's just going to come down to how extensive the the level of or how hawkish the approach that they take is. If they I I suspect that they're not going to do anything dramatically because, just like us, just like, what we do in the crypto market, where we try and learn about the past, and, simply we use the past to inform our present decisions. They do the same. So they're going to look at mistakes that have been made in the past as far as, approaching situations like this. And I think that's why they've been saying for a year now, oh, well, we're going to do this, we're going to do this, we're going to do this, and then they never do it. It's because they're trying to sort of prime the market, be ready for this, and they're just trying to build in that that expectation. So I think once they finally do start it, it's going to be gentle because they don't want to crash the market. What's my background? Now, I'm a physician and I was an economics major. So as far as my background goes, that's my current background anyway. Do you have a stats background? I don't know what that is. Oh, you meant a statistics background? No, no, I don't. Economics was my undergrad degree. What are my plans regarding this channel? I don't know. I don't, do I see it as a business opportunity? I'm not sure what I'm going to do. I mean, let's put it this way. Right now and for the foreseeable future, it's a hobby and I'm going to keep doing it because, I enjoy doing it. If for nothing more that then, like I said, I think crypto YouTube is a cesspool where, the information isn't just bad, a lot of it. the information is harmful. And so I see it kind of currently as a way for me to that I can actually help people because, I think that if nothing more, when I sit here and talk about, this thing may do this or this thing may do that, that stuff at the end of the day isn't the important stuff. The important content is the mentality and the approach to the market. And I think that's sort of what I can contribute. Because, people that are, becoming wealthy by, getting into these markets, sure, every once in a while someone buys Safe Moon when it, right before it mooned. But more people win the lottery every day than correctly time buying Safe Moon. So, your chances of becoming rich, you might as well literally be playing the lottery rather than this crap that you see on YouTube where people are giving out harmful information that way more people are losing their money as a result of YouTube than are, making money. So what I'm trying to do is instill, a particular mentality. And to answer your question in a long-winded way, so that's my plan for the channel, is to keep doing that. And then whatever may come of that, I'm not really too worried about right now. So I just want to keep doing this and hopefully, creating content that people are finding valuable, but not only finding, perceiving it as being valuable, but it actually being valuable. To me, that's more important because, stuff like you can, people can tell, some of these channels out there, oh, this is so valuable because they think it is, but in reality, it's not helping them, move forward in a progressive way in their investment future in any way whatsoever. Because, the approach that I'm taking, I think you can apply it to the stock market, you can apply it to anything. And it's a it's a generally low risk method of investing that over time can absolutely change, can change your financial trajectory. Safe moon bag. I actually, if you're into swing trading and things like that, I have a stance on things like SHIB and Dogecoin. I think they can be valuable assets to sort of, move into in the right places if you're a swing trader. But you really have to know what you're doing, and you really have to, um, be able to. Oh, I'm seeing stuff about the Fed now. Did they make an announcement already? Fed minus 0.25. Yeah, see, I mean, like that, like, if you get into some of these, it's really just leveraging what you're doing is leveraging, you know, the mass hysteria of the retail investor. And that's sort of, if you're someone that's able to do that and, if you're able to realize when, if you get in before it starts becoming mainstream and then you're able to get out. Wait, I don't get it. Did the Fed? Yeah, that's what I'm trying to figure out. Did they decrease the rate? Looked like, 25 minutes. I don't know. I don't know what this means. 0.25. Bitcoin's pumping. Yeah, I mean, this is what we talked about in the video yesterday when if the Fed comes out, and doesn't go very hawkish. Oh, so it's staying at 0.25. Okay. Wait, did they make an announcement? I don't, or are you guys speculating? Oh yeah, people. I mean, people definitely already know. You don't think there's some staffer in that meeting, right? So it's not a meeting with like eight guys in the room just sitting at a table. It's a meeting with probably you probably have a ton of people in that room, and they have a bunch of their staffers. You don't think anyone's texting anyone in the know, and someone's jumping on that information. Yeah, he told his gamer buddies last night. Yeah, so that's kind of what I was talking about yesterday, where depending on how this goes, it's sort of twofold. If if they sort of relax and don't go too aggressive, I think you could easily see something like us coming, I guess we didn't get all the way down there, but coming down to the support level and bouncing off. And you never know what's going to be the catalyst to potentially send us back up. I mean, look back in May and June. We just came down right until we got to the support level, and then that's where your institutional interest started picking up. You had a massive spike in volume. It's likely some large institution stepped in in and around these points, and then retail got hold of it and started going. Yeah, no, I completely agree. I would not. I mean, I am buying, but I'm buying on Friday when I dollar cost average, like I do every Friday. But yeah, I would not take this pump right here to mean anything. If you just look at the upside of the downtrend, you're going to need to get up to at least 41,000 and break through before it means anything. And even then, even if you do that, if you go back to like May, look at this trend that you're forming. So even breaking through to the upside is not going to mean anything. You're going to have to wait until some sort of base, forms over time. And then, realistically, I think these trends, something like that might be like the more reasonable place to look for a break in structure. And then as soon as you do that, it'll pull back. I mean, that's what happens. They try and you don't think that these guys know these exact structures that people are drawing the lines on their chart and then moving the market in the way such that it optimizes their potential upside. All right, Gohan's mom. See ya. Yeah, I mean the macro level trend is your friend. Like, you know, and in my opinion, the only one that you need to know about is this one. And it sounds like, it's a meme, but at the end of the day, just, this is the trend until this is not the trend anymore. And that's why, in my opinion, Bitcoin is, the asset that in this asset class that you want to be investing in because, you know, we're still at the point where no significant retail interest has come into, or sorry, no significant institutional interest has come in. Sure, you have a couple, um, things like MicroStrategy and Tesla, but overall, this market is still in its infancy. Yeah, I saw that. I saw that. I heard, people were saying that it might be MicroStrategy. I don't know if that was true or not, because I doubt MicroStrategy's buying I don't know. That's the kind of stuff that, I don't know. I feel like other people know more about because they look into it, whereas I don't really care. Yeah, there was definitely some baller out there buying lots of Bitcoin, but I'll tell you this, it wasn't me. Yeah, it could have been, Michael Saylor, and, it could have been either MicroStrategy or him as an individual investor because both of those entities own Bitcoin. Although, what's interesting is, and I actually don't know how this works, but if, the SEC starts to regulate crypto in some more aggressive way, if he will be able, as an individual, to buy Bitcoin if, if MicroStrategy continues to purchase the asset, because I don't know for sure. I don't know my corporate finance law, but I don't think as, the head of a company that you can be personally buying that your company is also pumping up. Yeah, but it doesn't matter. I'm saying in terms of legally, I don't think him is, because he individually owns Bitcoin, and if MicroStrategy is pumping up Bitcoin, I don't think he is allowed to own it, in his personal investment portfolio. But I don't know. I could be wrong about that. Yeah, have your sister buy it. Yeah, exactly. Oh, what's this thing? $5. Wait, is that someone just gave me $5? Sorry if I'm being rude. I really don't know. I've never seen this before, so. Oh, nice, dude. Thanks, man. I appreciate it. You guys don't have to do that though, but market is pumping like crazy right now just before the press conference. Is this a bull trap? Yeah, I mean, my thought right now is the fact that we're forming this double top. That's undeniable. And Bitcoin, so based on the stuff that I've been showing lately, Bitcoin is showing many different indicators that are macro level bearish, at least from everything that we've seen in the past. Even if you presume that we won't see things happen exactly like they have in the past, they won't happen again this time. Some of the indicators that we're seeing have traditionally been macro level, bearish signs, even in the general market. So if you approach it from that point of view, I think there's a lot of things to say that, the market is showing some very concerning signs. In addition to the fact that the macroeconomic level picture is bearish at the moment. You know, Traditionally, when the Fed starts quantitative tightening policy, it leads to a downturn in the market. So I can come up with 15 different reasons why the market is looking more bearish at the moment, and several reasons why it may not be. And just, I guess at the end of the day, the way that I approach things is I assume that I'm not going to be able, of all the, of all the computer modeling out there, of all the, finance gurus, etc., who all have a different opinion, I think it's naive to think that me or anyone else on YouTube is going to be the guy that knows exactly how this is going to play out. So, what I do is I sort of look at what the situation is. Okay. And I say, well, we have this, and this that suggests that we're in a downturn. So, I suspect the probability is higher that we go down. And therefore, what I'm going to do is, dollar cost average into the market. And I'm going to do it in a dynamic fashion such that if, we're here right now at 38,000, I'm assessing what, in my opinion, the risk level is going to be. And how I'm doing that is by using my model. I think there's different ways to do that, but that's how I do it. And, that's, and when I say a dynamic fashion, meaning, wherever we're at now, I'm dollar cost averaging into the asset more than I would be if we were, at a place where, if we were like up here at 48,000, I was dollar cost averaging at 48,000, and then at 43,000. This is a 1 week time frame, so you can you can look at, wherever we were every Friday for the last, however long we've been below 50 on my metric. I don't recall exactly how many weeks it's been now, but I've been dollar cost averaging using that. And then when we're below 50 to 40, I do a certain amount, et cetera. And then I gradate that amount slightly higher each time we move into a lower scale. So what I'm saying is, you know, personally, I think that there's a significant potential that we go down, but there's a lot of very smart people out there analyzing markets that will come up with wrong opinions. So to think that Jay from DCA or Ben Cohen from Into the Cryptoverse or Guy from Coin Bureau or Alex Becker from, 100x altcoins. If you think one of those guys is the guy that knows, I think that you're kind of fooling yourself, because there are going to be, you know, finance, economics, computer science PhDs from Harvard that are going to have an opinion on this market and are going to swing and miss. So that's why, coming up with opinions as to what the price is going to do, sure, if enough people are going to say something, one of them, some number of them are going to be right. But it's all about assessing the probability, and therefore, taking your financial or your investment approach in that way, rather than saying, oh, I know it's going to do this, because every time you say I know it's going to do this, then it's going to do something opposite. And when I say this stuff, um, I I think it can, like, the way that it's coming out can sort of sound like I'm being condescending or something like that. I don't mean it that way whatsoever. I simply don't mean it like that. I just mean it in, I just don't think that my prediction towards the market is going to, I can tell you based on what we're seeing here and, what we've seen in the past and, what these trends are, this is what very well could happen. But I'm not going to make my trades based on, my market analysis. I'm going to make my trades based on what actually happens at the end of the day. And by the way, I truly appreciate, the $5. Thank you very much. But truly, you guys don't have to do that. Federal Reserve signals plan to start raising interest rates as soon as March to combat persistently high inflation. Is that, again, like, if it's official, like, let me know. But they've been saying this stuff for forever now. When did uh back in like 2016? So, but like to varying degrees. It's not like, I came in and I'm like, oh yeah, this is the future. It was, you know, sort of a timid entry, and then, increasing. And I made all the mistakes that everyone makes back then. Oh, we got a West Coaster here. He went to UW. It's all speculation in the end, but Ben and Jay Bravo are good channels just like this one. Yeah, I mean, that's what I'm saying. Like, I don't know who Jay Bravo is, but at least Ben, I think he, for the most part, preaches something similar in that, you also have to remember Ben's channel now is to the point where, when it's at 700,000 people, just the bottom line is you're now appealing to the masses of YouTube. So you have to create content that can be understandable for right now where my channel is, for instance, it's people that are, interested in, typically interested in things like analysis and things like that. Once you get into, that range, okay, well now half of your viewer base are people that are, I don't know, just just a different kind of viewer, I guess, is I'll leave it at that. Oh no, man, I don't mind. Do you mind if we contribute to it? I don't mind, but you guys don't have to whatsoever. Um, like I've said, this is fun. This is a hobby for me, so I just enjoy doing it. Geo's place, what's up, man? It's 3:20 a.m. here, up for the Fed news. That's commitment. Although, I'm one to speak. I'm always up at that time. No, okay, right here, right now. Listen, I'm gonna look right in the camera and tell you, I will never make an O face or any other stupid face on my YouTube thumbnail ever. If I do, I suggest you go out there and you report my channel, get me banned, off of the platform. That's my Bill Clinton moment. Yeah, famous last words. 1 million. No, I will never do it, man. I will never do it. I couldn't. I don't care if it brought me infinite wealth and fame. I would never stoop to that level. I just couldn't do it. I couldn't look at myself in the mirror. That's why, I actually don't get how because I hear these people saying stuff and I know they don't believe it. I know that they don't believe what they're saying. And I just don't get how people can go out there and spill things that, are just verifiably false, and they just go out and say it anyways. Like, I don't know. It's just really it's really sad to me. Oh, dude, come on, man. Thank you. You don't I truly appreciate it, man. Thank you. You really, really don't have to do it. I thank you so much, though. That's very kind of you. Like, truly, that's very kind of you. Thanks, man. I don't even know what to say. I don't even know, like, yeah, I really appreciate it. I mean, you guys don't have to do that, but thank you so much. Yeah, you said, yeah, I think, thinking like an institutional investor. Sorry, I'm a bit embarrassed. I've never, that's, I don't know, that's truly kind of you, I guess is all I can say. But, I said thinking like an institutional investor, and I think that's what you have to do. You have to, we've looked at the on-chain metrics, and, I showed how if you look at the market every time, what you see is this situation where we have, first of all, let me say this as an aside before I go into this. The on-chain metrics, if you're unaccustomed, if you're unaccustomed to them yet, or if um, you don't necessarily believe in them or whatever it may be, the on-chain metrics are giving you the type of information into the market that, that only like hedge funds are going to have access to in the general market. So to not be utilizing that information and to not be using it to assess what's going on, it's imperfect information, clearly, but it's giving you access to information that you're just simply not getting out there, anywhere else in any other type of market. It, I don't know how else to state it, but I can't overstate, the value that on-chain metrics bring to typically the longer term picture of the market. I don't think necessarily they're going to help you become a better day trader or something like that. But that's not the type of analysis that I'm doing anyways. But I do think that they show you, they show you the general adoption, and they show you supply side metrics, and to a degree they show you demand side metrics. And I think, when you're looking at these things, it really does give you a picture of the broader sense of the market. So, I know a lot of people sort of have trouble, utilizing or believing in these on-chain metrics, but I think they're really giving you a lot of very valuable information. Now, that's a long way of saying what I wanted to discuss, which is, if you look at the last two market cycles, what we had was a situation where, okay, so here are your prior all-time highs, right? Like right at this level. You see the larger wallets. So the larger and the long-term holder wallets, if we have just another curve under here. So we're going to be coming from like during this time. And the larger wallets, the number of Bitcoin they're holding goes like this. Actually, let me do it like this. So we'll just draw another curve in this same place. And what we're seeing is the number of Bitcoin they're holding is going like this, and then right when we start to get to a prior all-time high, you see it start to go like this. It does spike up again at some point, because I think even they caught a little bit of the FOMO as the cycle was coming into here. But for the most part, it was decreasing during this time. These are going to be your long-term holders. Then what you saw, if you look, what we had was the short-term holders, or the retail investor type wallets, they started ramping up once we got to the all-time high. So it doesn't, you don't need to be a genius to figure out the fact that the long-term holders are dumping to the retail market right once we get to this prior all-time high. And we saw the same exact thing. We saw the same exact thing happen right here. Your long-term holders start selling right here. They start dumping into the retail market, who's buying as it goes up to 64K, right? And what we've seen during this leg of the cycle, you've basically had very little retail interest. I mean, you can see the stark drop off in the volume, right here, and then even price volume. So, we had this fairly high, we had this fairly high retail interest right from December of 2020 right through May. Then when we crashed, retail interest dropped off. And remember, this bottom scale here is logarithmic. So we're talking, let's look at the percentage change in interest in the market. So right here, we reached our peak in February. And since that time, the volume has dropped. The price volume has dropped 75%, nearly 76%. So we've just seen this situation where, retail interest in the market has just absolutely plummeted. And what has been happening during this time? Mostly the long-term holders and higher net worth wallets have been acquiring, doing it slowly, but acquiring. And then they did sell a small amount here, but it was nothing compared to, the selling pressure that we saw in this stage of the cycle. So, the point is, what we see is that retail is, they think like when it gets to a prior all-time high, that's when I'm going to FOMO in. But like I was saying earlier, your upside from once we get to this level, you're looking at a couple 100%. If you're investing in these lower levels, then you're double, triple, quadrupling your potential upside. So that's how the institutional type buyers, that's how they are thinking about the market. Whereas, retail is thinking about, I guess it comes down to retail has small ideas about the kind of gains they can make, whereas institutions have big ideas about the kinds of gains that they can make, because they are playing the long game. They don't care if they sit, They don't care if they sit on an investment that they bought back here in 2018 and, sit on a loss for 3 years. So you're saying an interview with who? Sorry, I can't, I don't see who you were referring to. As far as, someone says people talk about 4-year cycles. What about 4-year retail volume cycle? Um, we hired them out last winter. We need to let new retail. Yeah, I think, the the retail investors, I think, are exhausted from this move here, and they're not exhausted from Bitcoin mostly. I think they're exhausted from the altcoins because institution, or the the money movers in the market. I don't know that it's necessarily institution. It's probably algo traders, bots, that sort of thing. They just ran circles around the around the retail market as far as the altcoin market goes. Um, I think a lot of people got absolutely annihilated in altcoins. I think a lot of people probably did well, but those were the ones who, could walk away from Binance and not be constantly, trying to make trades every day. The people that were not like that, were pump chasing, I think they got absolutely wrecked. Sorry, there's a lot of longer comments right now, so I'm trying to. I love to see him interview Jay. Who's? Yeah, that's. I don't know who you were referring to, and it won't let me scroll up. In the past cycles, the length plus severity of bear market correlated with the size of the blow off top. Given this time, no blow off top, larger market cap, etc., long bear markets are a thing of the past. I so I don't know that I would say that a long bear market is a thing in the past. In fact, um, so we have kind of two things. There's two things to consider. First of all, if you go look back at 2000, like the stock market in 2000, we entered into, more or less, we didn't get back to those prior all-time highs for what it was like 14 years or something, where we didn't get back to our we could just take a look rather than me guessing. I believe it was 14 years, but Nasdaq to me is somewhat comparable to what we have in crypto. But yeah, so if you go from March 2000, you didn't get back to your prior all-time high, and you got back to it, but you didn't get above it until July of 2016. So you went 16 years where, if you want to think about it in terms of when you get back to your prior all-time high, it was 16 years. And think about it this way. Google and Amazon and every other major tech company that you know about existed in this time when the market was what, at maximum 75% below its prior all-time high, like here, 70%, 74%. And, we stayed down in these levels for 16 years. So to think that this can't come for crypto to me is, it's just a, it's one of these things where you hear about, they'll write about in textbooks 50 years from now in financial textbooks talking about how no one at the time believed that it could happen, and then it did. But it can happen again. There's nothing, in fact, the markets look very similar. You have this, you know, you have this run that we went on all through the 90s into early 2000s where you had nothing but upside. And then, um, is my stream out again? Sorry. It looks like it's down, but I can't tell. Stream health is excellent. Never mind. So yeah, I mean, you have all through the 2000s, we go on the run, and then you have all these companies that are worthless with just these massive valuations, and then it all comes to a head, and we have this correction. And that's the kind of thing where I think people need to appreciate the fact that it could happen again like that. There's nothing to say that it can't. Um, Now, on the other end of the other side of the coin, the total crypto market is smaller, so I think it would be harder to depress the crypto market for um, you know 15 years or something like that, like you saw back in 2000. So I think we could still see a bear market, in fact, one that's longer than we've seen before. But I think it would be, even if the general economy was cut down, I think what you would see is Bitcoin would recover, and a lot of the altcoins, like I've talked about, a lot of the altcoins that we talk about right now are worthless. They will be absolutely worthless, even if they, um, appear to be potentially good projects or whatever. It's all, lots of things seemed like they were good projects back in the 2000s, but that doesn't mean that, just because they seem to be good projects doesn't mean that A, they'll gain adoption, or B, that they actually are good projects, because, a lot of this stuff hasn't played out yet in terms of how it will be regulated. Um, how's it going to be regulated? What is the eventual form of adoption going to come in? Um, we just don't know yet. There's so many unanswered questions in the market. So, if governments of the world, for instance, went after DeFi and made it so that it was, not feasible anymore to get into that industry, I think you would see a situation where a lot of these layer ones that are DeFi focused would just go by the wayside, and that's not out of the realm of the possibility. I think the banks are worried about DeFi. So what do you think they're going to do? They're going to lobby against it. All right, yeah, I'll switch from whatever I'm using. I actually can't see questions anymore. Let me see. I think, oh, here they are. Yeah, we've been in an up market. So it says that scariest thing is that Bitcoin has only ever known an up market or an up tech market. And that's exactly right. We've only, been Bitcoin investors during a pure up market. These aren't bear markets, in my opinion. These, let's just do this real quick. Let's go take a look at of course I can't find it now. Oh wow, some of my scripts are gone. All right, I don't know. My everything is like not functioning today, but you can't make a logarithmic regression curve if there's, if the line just cuts through and goes right down below it at the end of the day. And we haven't seen that. We've seen nothing but the market, sort of moving. If we just take a curved measure of the market, we've done nothing. I'm showing you on a log scale here, and we're basically moving up in a nearly linear fashion. So we in the crypto market have yet to experience what an actual bear market is. These have just been moves above this. You could think of it as, and I hate to use words that I did not invent, because the inventor of math and the inventor of science and charts and technology and wisdom invented all of these things, but we are moving along the fair market value line. Okay. So These are simply extensions above that created by the retail market. And, other than that, it's basically just coming right back down to it. So I don't think that we've truly seen a bear market yet. We've seen bull markets and then it returns back to the uptrend. What I've seen like 28 different things said in the chat so far. What has Powell made an actual decision yet or all right, I mean not like it's his decision, but has he made an announcement yet? 4K charts as in someone says I want 4K charts or maybe they said that hours ago. The actual YouTube chat isn't updating, so I'm having to use the OBS chat. I better not try and stream a video because it seems like we're already having issues. If I try and stream the video, that will be a big fail. Although I do have pretty good internet because I work at home. Um, like I said, I'm a radiologist, so I work at home, so I have to be able to transfer huge files quickly from home. So I don't think it's my internet that's the problem. My yeah, my Bitcoin. So someone says, "What is your Bitcoin buy target?" So I don't have a buy target. My buy target is all, you know, when we're below on my, if we just go over here, put this on the when we're below this 50 level on my risk metric, when we're below this level right here, I dollar cost average and I do it in a fashion such that I, do one multiple of how much ever I'm going to dollar cost average, and then I do 1.5, and then 2, and 2.5, and then 3 times. So, let's just, just throwing a number. If I was going to dollar cost average, I don't know, $10 or $100 per week, then I would do 125 here. And if it was down here, I would do 150 and then, 175 and then, or whatever. I don't know. I'm bad at doing math like that, but I guess it would be, um, whatever. You guys get the point. I increase my dollar cost average as I go down. Oh yeah, so I forgot to tell you guys, Pal's going to be making his announcement. I'm going to be interviewing him at 2:45. He's going to make the announcement on the channel today. What color is air on the X-ray? It's blue. Oh, what opportunity of a lifetime? I don't know. It depends on if so I think I saw someone ask before like moving average. So, traditionally, and this is just another thing, we've talked about a lot on the channel, but let's get rid of this. What is happening? I'm usually not this bad at, getting my charts to look normal like I am today. My logarithmic regression indicator is that I just released a new indicator the other day and it's it's not in my list and it's not showing up. So I don't know. what's going on with that. But traditionally, in terms of what is a buying opportunity of a lifetime, the 200-week moving average has been a level at which the price just simply does not go below. And this is to just sort of illustrate how, decent of a place that we may be in right now to acquire. Let's look at something actually, because I think this is important. I might even do a video on this because I know a lot of people won't see this one. But before we, so when we came down, we had our, this consolidation that we formed right here at around 6,000. If you look, we were about 53% above the 200-week moving average. And if you look from where we're at right now, or where we were anyway, especially when we were down at 42,000, now we're back at that level again. But, we just were about 40% away from it. And this is historically, the level of last resort where we get down to when the market is at its lowest. So we were essentially nearing the point at which, um, you've seen us in the past be prior to, finally coming down to the 200 week. So to answer your question, imagine if 4 years ago or however long it's been at this point, if I asked you, well, what would you think about buying $6,000 Bitcoin, but you're going to have to be sitting on a 50% loss for about a year. Would you be okay with that? And I'm quite sure that you would be, quite all right with your 10x gains, but you're going to have to sit on a loss for a short amount of time. So, if you look at it like that, we are potentially near this where we were back then prior to this capitulation. All right. So as far as, is this a good place to be buying? That's why I'm dollar cost averaging right now, because like I say, I don't mind sitting on a loss. I don't mind sitting on a loss for a year or two. That's not a big deal to me. But that comes down to the idea of how much do you believe in Bitcoin, how much do you believe in crypto, and do you need that money right now? Because if your answer is I believe that crypto will be around in 10 years and I believe that Bitcoin will be a store of value and I don't need that money right now, then dollar cost averaging is the only approach to take. So what would how did you phrase the question? Sorry, I can't see where you asked the question now, but oh, this is the opportunity of a lifetime. $20,000. I mean, if it comes down to the 200 week, I'll be, I'll still just dollar cost average like I always do, but I think that would be a point where it's difficult to see the price going much lower than that. But like I said, that's in the setting of status quo market conditions. That's in the setting of this continuing. If, if, man, I'm having just innumerable troubles with the charts today. Sorry, guys. That's given that we stay in something like this, because if this happens, if 2000 market crash happens, that 200-week moving average is going to quickly be invalidated. I showed the other day the line of last resort during this market cycle right here was the 28-year moving average. That's where we held support at, was right here. So, you know, if you think it can get bad, by going to the 200 week, if the market's in a true bear market, if we're in an actual bear market, the 200 week moving average is not as bad as it can get. But if the market stays in generally a healthy condition, then yeah, this could be what you're looking at, low 20,000s. My daily job, well, I only work like, I don't know, 12 days or 13 days a month or something, but I'm a radiologist. Genghis Wan is also a radiologist, so that's why he's asking me all these radiology questions. I don't set price buys. So someone said, I hope you have your buys in for the wick down. I don't, yeah, I think that's a fair thing to do. I just don't do it. I don't know if it's out of laziness or whatever it is. I have a buy set for Fridays and I take that. What would you do if the 200 week average is broken badly? I would just keep buying. I like, I believe in the long term. And in fact, if your your levels that you're buying at in anticipation of continuing along these trends is invalidated, it makes it, unless the fundamentals become invalidated, if the technicals, and this is actually truly important, that's a great question you ask. If the technicals become invalidated, then that's not a big deal. In fact, it suggests that you really should be buying more to decrease your cost basis, because if it gets invalidated and you head to the downside, well, now you have a cost basis that's much higher than you were anticipating relative to where you're at. But if the fundamentals become invalidated, that's when you have to become concerned, and you could potentially be sitting on an investment that's you know basically washed up, because the technicals can, things can affect them, i.e. COVID, some massive unknown capitulation from, an outside large holder for whatever reason, reasons that may be unrelated to the actual fundamentals. That can cause a deviation from your technical plan. But if the fundamentals remain sound, then I think you're fine and you need to continue your course. But if, like I said, if, like if governments go after crypto and it's a concerted governmental effort across, the globe of all the major superpowers, and they decide they're going to make it prohibitive for your average person to invest in crypto, then that would be, regardless of how, quality the technology is, that would lead to a fundamental shift in the way you have to view the asset class. Because if it's now illegal for, your average Joe to enter the market, he's not going to, quite frankly. And that would be an absolute invalidation of, that would be an example of an invalidation of your investment approach. So if the fundamentals change or are, altered for some reason, then you have to take a new approach. Conversely, imagine there are opposite scenarios, which I don't think will happen, but, imagine if the United States came out, Jerome Powell at, 2:30 today announced that Bitcoin they're going to be, instead of tightening the markets, we're going to be investing heavily into Bitcoin for the rest of the year. That would be a fundamental shift to the upside. So you can have things like that both to the downside and upside. It's an extreme example, one that's not going to happen, but you take the point. So when you're investing, that's a long way of saying, if our technical, level is broken, for instance, let me just go back here real quick. You know, if let's say that you were a Microsoft investor. Well, I'm sure whatever technical plans you had for Microsoft did not include, going down 60, whatever, 66% in, just a few months. But you knew, if you were an investor, and, from there, they even went down further, I think, sort of at the height of the hype around Apple, 75% down, but you knew the fundamentals were still strong for Microsoft. And if you were an investor in Microsoft, sure, your technicals were invalidated, but your fundamentals remain firm and in place. And, from that point now, you're up 400 or 500%, 400%, which is, nothing to sneeze at in the stock market, especially for a blue chip. So that's kind of, a long way of saying if we go below the 200 and it's significant, but there's no fundamental reason for it happening, nothing is invalidated, and I will continue the course. If something happens to the fundamentals, then you have to reassess. Yeah, quantum computers that could bury Bitcoin. Yeah, I could see something. I'm not going to sit here and pretend to know all about, quantum computing, but I know that it changes the game for cryptography. Um, Actually, where's the index for? I don't know. Dr. J said air is blue. Beat Bitcoin is a female or male in your opinion? It's 2022, bro. There are no females or males anymore. Come on, man. I thought you'd know that. You gotta remain gender neutral out here these days. If quantum computers can destroy Bitcoin, we have bigger problems than the crypto market. You're right. Wax coin, I don't know what that is. Bitcoin is non-binary. Exactly. Yeah, I'm not even going to touch that any further beyond that. I literally will get my channel will get I don't even know. I'm the kind of person that I don't really, read a lot about that stuff. I don't watch a lot of TV, so I know there's a whole dynamic of things that you aren't allowed to say, and I don't know what it is, so I just stay away from it. That's the problem with not being on social media. I don't know what's acceptable anymore and what's not, so I just don't say anything. So, all right, guys, I think that's going to be on that note. I think that's going to be it. So, again, I enjoy this every time we do it. And non-binary. So, until we do it again next time, I'm going to release a chain link video today. Um, Actually, it's a chain link video, but it's a broader market video, and it's discussing a particular topic that could be applied to anything, but I'm going to specifically apply it to Chainlink. So you guys can check that out later if you want. Even if you're not interested in Chainlink, it's actually relevant to everything. So just I think it's talking about assessing fundamentals versus technical analysis, and how that can be useful. By the way, I just wanted to throw this out there. I actually got the idea for the video, and I'll mention this again, from Upside Down Data. If you guys haven't checked out their channel, I think, if people that are in general interested in my channel, I think you guys will like their channel as well. They do a lot of really cool stuff, so I would check them out. So, yep, that'll be it for this one, guys. So, you know, I'll probably do another live stream. I'm going to Vegas tomorrow, so I might do one there or something in various states of mental coherence. All right, Gio. Good seeing you guys. Good seeing everyone. Thank you guys for joining, and to you guys who did those donations, that was very kind of you. Thank you, and I'll talk to you guys later. See you. as soon as I figure out how to stop the stream. All right, here it is.